Good day crypto trader. Bitcoin, BTC, price drops in European trading as this volatile week kicks off with surprise Spanish inflation data. The market was expecting a drop from 5.7% to 4.97%. Instead, inflation jumped to 5.8%. This confirms what central banks have been yelling over the past few weeks and which markets have been ignoring. Is reality catching up this week? Bitcoin prices are making traders nervous as this week could be the toughest in the first quarter of 2023. The US Federal Reserve, the European Central Bank and the Bank of England will release forecasts and monetary policy, as well as US jobs data due to be released on Friday. There are no more variables available to trigger whipsaw movements on the chart. These events will make trading BTC difficult and could force many traders to end the week with losses, depending on where BTC is trading at the official closing bell on Friday night. Meanwhile, BTC plummeted on Monday as it received false breakouts and rejections against his $23,878.62 and the upside was pressured by profit-taking. The Relative Strength Index, RSI, is also falling and could break through the overbought barrier in search of some correction. Considering all central bank events and US jobs data, BTC is expected to drop to close to $21,969 by the end of the week. The market will jump on this positive narrative if the bulls hold up to current events or central banks become very supportive, indicating that inflation can only come down from here. We expect a higher rally to reaffirm the rally from this important level. $28,695 is still rallying very high, but profit levels should bounce back earlier this week. Ripple, XRP, price faces big test this week. A salvo of central banks is expected to hit the market through Wednesday, with each central bank announcing its rate hike decisions, forecasts, and monetary policy stance on the current state of the economy intend to do something. With Spanish inflation rising Monday morning, traders look to Federal Reserve Chairman Jerome Powell for clues as to whether U.S. inflation will start rising. That would mark the end of the current recovery rally for stocks and cryptocurrencies. Ripple's price action on Monday has spared traders a surprise curveball in European economic data as trading plans aimed at anxiety and stress until Wednesday. Instead, traders had to brace for some massive profit-taking as inflation in Spain soared, prompting a market reassessment for the European Central Bank, ECB, to do more. With the Fed on Wednesday and the U.S. jobs report on Friday, traders are keen to see if Jerome Powell will issue a warning and challenge the market consensus for a 25 basis point rate hike. Therefore, XRP is withholding gains and seeking support near $0.3925. This level corresponds to the 200-day simple moving average. By Thursday, a day after the Fed's decision, he announced the ECB and the Bank of England, the focus will drop slightly to $0.3710. If all central banks continue to rise at the same pace and forecast further rate hikes to sustain inflationary pressure, we expect the market to revalue XRP and risk a fall towards 30 cents. Inflation in Spain could become an outlier as Northern European pensioners move south to avoid heating costs at home. So this spike in inflation is likely to be temporary, and colder parts of Europe could see even lower inflation. If that's the case and the central bank has already written that number in its comments, we expect XRP to quickly return to $0.4228 and surpass $0.4800 as its price target next week. Dogecoin, Doge, price action fell on Monday after breaking the weekend's green uptrend line purely technically, but the bulls failed to close beyond it. Unable to get out of the pool, traders looking for the bottom of this tank will see prices fall. Inflation in Spain unexpectedly spiked and cryptocurrencies began to move in a diversified order. Is losing a coveted investor? Dogecoin price fell below $0.0900 on Monday. From a broader perspective, cryptocurrencies should be able to continue rising in the coming months unless some economies start to move at different speeds now. Inflation has fallen. Given this mixed pace of inflation and price pressures, Further EU rate hikes are likely. Risky cryptocurrencies are not suitable for most investment portfolios, but this draws a noose around investors as they want to choose safe coupons from bonds as interest grows. This means that cryptocurrencies will also see more inflows from the US, while less inflows from Europe, meaning the overall cryptocurrency recovery will stall. With global inflation starting to fall on all fronts, a trader can plan for a full cryptocurrency recovery by 2024. Doge itself is looking for support near $0.0824, with monthly support and his 55-day simple moving average as support. Next week, it will be important to see where the monthly pivot lies, as January is in the final throes. Considering multiple central banks and Friday's US jobs data, Doge is likely to plunge towards $0.0757 as he finds support near the 200-day SMA. Rumors have already surfaced that the US Federal Reserve will raise interest rates by 25 basis points and the Bank of England will raise them slowly. That will support the market and wipe out some of the nerves and risk premiums priced on Monday and Tuesday as Doge quickly bounces back to the green uptrend line and breaks out of $0.0944 by Friday of XT week. He is expected to test $0.1004.